Hi everybody, welcome to the webinar, which is Small Hinges Swing Big Doors. Now the idea behind that is if you imagine a great big vault, huge doors. Well, if you look at the hinges of those doors, they're really, really small, but they can manage to swing those great big doors open. Okay, and the same rules apply to trading. So what we're going to look at this in this webinar is how small wins can really accumulate. Okay, when you systematically just keep applying the same system over and over again, and you are building your account up to a very, very large sum of money over a period of time. This is all part of the compound interest trading challenge. So if you haven't seen that yet, then there's plenty of videos where I talk about what that's all about. In short, it was somebody said, well, you need to have a lot of money when you trade. And I said, well, you don't. What you need to do is follow a process and don't be silly and take huge bets with a small account. What you need to do is just do small trades, maximum of 2% of your trading accounts. It doesn't matter how small an amount per point you are trading at, you do not risk any more than 2%. Otherwise, you run a very high risk of blowing up your trading account and losing all your money. So the trading challenge is going extremely well. It started to say 1st of March. What are we at today? End of October now, and yeah, it's doing well. I'm not going to show you the exact numbers because that's going to be for another day. But what I'm going to do is show you all the trades that have been made over that period of time, and all the winners and the losers. Okay, so you can see all the losing trades, yeah, what they look like, and all the winning trades, and then it will give you a better understanding of why the account is so healthy. Bearing in mind that once you're getting into the 5 and 6 figure accounts, that's where you're starting to increase those trade sizes, still without risking any more than 2% of your trading account. But because you have a bigger trading account, you are able to increase those trade sizes, and that's how the account grows exponentially. So what I've done is I've started from the acorn level for people so they can see what I've done, seen all the trades working all the way up. So when that becomes a nice 6-figure number, I'm still only applying the same principle, which is to aim to achieve 20% return each month. Some months maybe 10%, but the aim is 20%. Other months I might get 30 or even 40%, but I'm not actually risking anything more to try and achieve those results. What I'm always after is 20% a month, and then 20% the following month. And I'll show you the compound interest calculator as well. So because of the way that webinars stream, I think that I want to make this reception as good as possible. So what I'm going to do is switch the webcam off now, so you're not going to see me, but it will enable me to then share the screen with you, so you can see a quick live trade, because I think that's always useful, so you can see what strategy I'm using. I've got one open at the moment which was opened yesterday, so I'll show you how that's going, where the target points are, and how that trade's being managed. Okay, so we'll have a look at that as well, just to show you how that account just continues to keep building up nicely. Okay, so if you have any problems at all with audio, I do have a number where you can dial in, which is 0203 514 2972, and the PIN number is 7263266#. So if any problems with the audio on your computer, you can switch and dial up on your telephone, and you'll be able to see the screen. It's just that you probably will get better audio. All right, so I'm now going to switch to share screen with you, so you're not going to see me. for a little while now, but you shall hear my voice. If you get any problems, please put a just to say, if you can't hear me clearly or if there's any problems at all, the last thing I want to do is keep talking, only to find out later on that nobody could hear me. Okay, so if you can let me know, I'd be grateful. Thank you. So let's get straight into it, and I'm going to share my screen with you now. Webcam's coming off, and share screen is now coming on. So I'm going to share my entire screen with you. Okay, so if you can't see that, let me know. Loading. And we're going to go straight to the charts. So you should be able to see all of the different markets list here, and we're going to go straight into the German DAX. So what can we see here? This is the daily chart. So let's just have a helicopter view of what's been going on the German DAX. We can see very clearly here that the market is in a downward trend. The moving averages are all pointing down. This is the 200-day EMA, exponential moving average. This is the 50-day, 20-day. So they're all pointing down. They've all crossed over each other and pointing that way. Okay, what we can also see are the high levels, which were earlier in the year in May and June, where the DAX hit 13,169. We've also got other major levels of resistance on here now, 11,846, which is this red line here, and we have several trend lines as well there, which are all pointing downwards. So it's a downward slope. Also, other things we look at is the market. The DAX is making lots of lower lows. So of course we've got a low there, rally, then a low again, rally, and then it makes another low. So the lower low than that one, lower low than that one, and again with low, a little bit of a rally there, and now it's fallen to almost 11,000. Okay, so that's quite a stark fall from June of this year for the DAX. Okay, but that's what happens with the markets. They go up in steps and they go down in an elevator. Okay, and that was just literally in so 4 months that move's happened. Now, in between those falls, okay, we're always going to have opportunities to take money off the money tree when the markets start to rally a little bit. Okay, so though this is a downward trend, what we're going to do is zoom in on this strategy to the 1 hour time frame. So still on the 1 hour, there's less noise than the micro time frames that we look at sometimes, the 1 minutes and so on. So this particular strategy, the trade I've got open at the moment, we're going to have a look at now. Now let's go to my trading diary. So let's go there now. You can see at 10:14 yesterday, I opened a trade on the DAX, which was 11,315. Okay, now because this was a medium-term trade, I was able to have a much bigger stop on this. Okay, so the trading diary is very important, so we can always analyze previous trades. You can go in, put notes in here, even add a chart to it, etc. Very important. If you are still not analyzing your trades, the trading diary is very important. Okay, to just analyze what you've done, any mistakes that you've made that you can go over to make sure you don't repeat them again in the future. Okay, it's a great record to see that you've actually, your activity, that you've made a trade. And this one was made on the web. It will show if you've done it on your mobile or anything like that. But in this case, it was done on the web. Now, important on here as well, which I always, sometimes I always want to just point out to people how high risk trading is. And this statement at the bottom here, spread bets, CFDs, complex instruments, and come with a high risk of losing money due to that. 79% of retail investor accounts lose money. Okay, now glad to say we are in the 20% that do very, very nicely. Okay, and there's lots of reasons why we are in that 20%, which I go into in other webinars and other trainings. But it's important that you stay in that 20%. Okay, the other 79% of retail traders, those are the ones that we take the money from. So if they're selling, I'm buying. If they're buying, I'm selling. Okay, I'm always on the other side of the trades that they're making. Right. So let's get back to this. So this trade was opened 11/3/15. Okay, 10/14. So we're going to have a look at this yesterday. So I want to show you something really important where I didn't get stopped out. So this was the 10 o'clock candle. Okay, so the price was at 11,297-ish. Okay, and what I was looking for was to get a good entry here with a target of 11,525. Now it has changed slightly, and I'll get into that in a minute. So this was at 10 o'clock yesterday. Okay, and look at what happened when we had the 1 o'clock candle. Okay, the 1 o'clock to 2 o'clock 1 hour candle. The price did a massive spike all the way down here. It's a bungee jump within that 1 hour time frame, this candle. Okay, so it fell to 11,221. Okay, now where was my stop? Well, my stop on this particular trade was at 11,189. So it was below this level of resistance, this major level of resistance here. I was able to put a stop below. So this was a sizable stop. On other trades, you'll see the stop is only like 20 pips, sometimes only 30 pips. Okay, on this one, it was over 100 pips because I could see that it was in the buy zone, but there was still a chance that we could see a bit of a whipsaw kind of effect here on this one, and that's exactly what happened. So had we gone into the shorter time frames, the micro time frames, we potentially could have actually made some profit as it was falling. But in this particular strategy, this was on the 1 hour, okay, the 1 hour time frame. Okay, so my stop was at 11,189, so I didn't get stopped out here. But if you see how low it went down to 11,200. So let's have a look at that. The low was 11,209. Okay, so 11,209, and I entered at 11,315. So at one point I was 106 pips. That was the lowest point. I was 106 pips. But because my stop was down here, and because I've managed to trade correctly on entry, okay, I was happy. Okay, I mean, if it had stopped me out, and so be it. But I was happy that everything was set up correctly. Okay, because I'm looking to make over 200 pips on this particular trade. Okay, so it was a 2-to-1 risk ratio here, a little bit more than that, but it was definitely worth making the trade. So you can see what's happened since then. Okay, the market is continuing to stay in my buy zone on the 1 hour time frame. So even though the price crossed through the line here, it then came back up and has continued to move overnight. I kept the trade open overnight, and we are at a level of resistance here, which is 11,434. So it's tried to break through resistance 1. It got as high as 11,482. Now my target here is 11,538. So let's just make that a little bit clearer for you here. That's better. So there's 3 dots here that we're looking to join up. This is the first one, which is on the 1 hour time frame on Thursday last week. This is the second one, which is on Monday this week, 29th. And I'm looking for the price to test this level of resistance here. So there's a trend line on this 1 hour time frame is actually up. So the daily time frame is down, but on the 1 hour we're seeing the price actually making a higher high than that one. Okay, and I'm looking to see this make a higher high than there. That's why we're looking to take profit here as a target point. Okay, if you can put 1 in the chat box, if that all makes sense, please. Okay, great. So my target now on this trade is 11,538. Okay, so let's have a look at the trading platform. So we can see that trade open at the moment. So there it is, 11,315. It's now at 11,430. So it's still got quite a way to go. It's got another 100 odd points to go. It's already up 112 pips. So you could say, well, why wouldn't you take that at the moment? Well, why? Because the strategy is to take it when it hits that 3rd dot. Okay, so the 3rd dot being just there. So I'm going to actually put in a limit order now of 11,538. Okay, so let's just amend that. 11,538. Oops, 11,538. Okay, and also what I'm going to do, because this is giving the trade wiggle room. Okay, if it does start to pull back, then what I do have is a point here where I will bank some of the money. So if it does actually just go lower than this candle here, okay, which was at 8 o'clock this morning, I want to know. So I want to just check to see what's happening. Okay, so I'm putting an alarm in there. Just try again. I think it's just a little bit slow at the moment, but we've got the alarm is at this point here. Okay, so there we are. So around the 11,384 mark. Okay, see this candle again? These are all 1 hour candles. It's just testing this level of support here. So the green is support, red is resistance. See, support. Of course, we've got our magic black line here as well, pivot there as well, and the moving averages, and so on. Okay, so I'm looking for profit at 11,538. So what I'm going to do is I'm just going to confirm that 11,538 limit order, but I'm keeping an eye on the trade. So if it does get down to 11,384, I'll see what's in potential. I could just take the 70 pips there. So okay, I could take 100 now, but I'm not doing that. I'm waiting on giving it, because it's a different strategy, and giving the price chance to wriggle around a bit, and go for this 11,538, which is the 3rd point. Okay, the 3rd point on this trend line. Again, just want to make this point really well, that 1, 2, and 3. Trend line here as well, the tram lines to here and here between these 2 points. Okay, so what I'll do is I'll just post everybody on this webinar just to let you know what the result was of this trade. But this is just so this was to show you a live trade, what's happening, the reason why I made the trade. I will definitely bank some money. hopefully it will be at this point up here, which would be the 11,538. Okay, so that's the first part of this webinar. Now the second part is where we're going into this small hinges swing big doors. Okay, so we're going to have a look at the compound interest calculator, which is very important, which I look at all the time. So let's go into that now. So you can see that the calculator has got this £2,000 amount in. The profit per month we are looking at is always 20%. Every month, 20% upon 20% upon 20%. So if we go from week one, this should say month. It's changed for some reason. So it's month 1. 20%, okay, which is how it started in March. Needed to get £400, and then at the end of the month, 2,400 to play with, and then we need to get 20% of 2,400. At the end of the month, it's 2,880. Okay, and so on. So this is how we know exactly at the start of each month how much we need to make to achieve 20% for that month. So you can see how these numbers just get bigger and bigger and bigger. So at the moment we are coming towards the end of month 7, and at 20% a month from 2, it should be a balance of 7,166. I'm not going to go into it at the moment, but it's massively more than that. Way more than that. Okay. In fact, we are, we're more into like month 11, month 12 kind of numbers at the moment. So doing more than 20% a month. So maximum risk per trade is always 2%. Okay. The target was always 400 pips a month if you're doing 20 pips a day, or doing 20% per month. Okay, so with the compound interest calculator, we know, or I know, the start of every month what I need to achieve to build this up. Now, just to give you an idea, once you've got an account that's in the region of, say, 50 a month, of 53 to make, so you're looking to make 10,649 that month. Now, if you were starting out trading and you just started with 2,000, you are an idiot if you try to make £2,000 with a £2,000 account in one go. You will lose all your money. If you've got a £10,000 account and you try and make £10,000 in one go, you will lose your money. Okay, absolutely guaranteed, which is why 79% of traders lose money. They just get all the risk reward ratios wrong, their trade sizes, so that trade at this level, they trade at £5 a point and £10 a point, crazy numbers, okay, without actually looking at the size of their account and what drawdown recovery means as to how much your account needs to recover by when you make losses. Okay, it's crazy. So this is the systematic process of building up a 20% return every single month. And then once you get up to these numbers, that's when you can start increasing the trade sizes, which you have to if you're going to get and achieve that target for the month. But if you've got a £30,000 account, you can risk up to 2% of that 30,000. So you can risk up to £600. So if you are trading at, if you were risking 100 pips on a particular trade, okay, you're going to be trading at £6 a point. If you're risking 50 pips, then you are able to trade at £12 per point. So the numbers are much, much different as your account size increases. So here at 2,400, you're only risking at 2% of your trading capital. You should only be risking a maximum there of £48. Okay. It seems small, but that's what you have to do. And you might risk £48, but you might win £120 on a trade. Okay, so you might grow this very quickly, but Rule number one is when you're trading, to steal from Warren Buffett, don't lose money, as in don't lose your trading capital. Rule number two is following rule number one. Okay, the priority is always to preserve your trading capital. You do not want to keep topping up your trading account all the time because you've just been fly by night. You just blown the account up because you completely got it wrong and risk far too much per point. Okay, the markets will chew you up and spit you out. Okay, as simple as that. So that's how we are able to see how much to trade each month. And so I always look at that, what I need to make at the start of each month, and I'll always look to exceed these numbers, of course, but to 20% a month. Okay, risk no more than 2% of whatever that trading count is at the start of each month. That's the maximum risk you can take on any one trade. So, for example, one from the account now is to a level where I can risk around about 360 pounds on any one trade. So by me having a stop of 110 pips on the current trade that's open, that meant worst case scenario, I was going to lose 220, but that's within the 2% risk. Okay, so very rare do I take a risk up to 2%. Sometimes there's only 0.5% of the trading account. Sometimes there's only 0.2%. So it's rare I get anywhere near the 2%, but it's there, no more than 2% on any one trade. Okay, otherwise, that's why margin requirements are quite good. The new ones that have come in, it stops you from being a crazy fool, risking far too much per point. And tons of traders do that. Okay, and that's where they give us their money. So that's a compound interest calculator. We can put any number in here. Desired amount to achieve 50,000 in 12 months. I'd need a return of 30.77. So from 2,000 to make 50, that's the kind of return that you're looking at. Okay, now we don't need to shoot for the stars and try and risk everything to get to these big numbers. We'll get the big numbers and be able to, and the whole point of this process is so that I can show you that you just need time on your side to build it up. Okay, that's all you're doing. You just need time to systematically build up the account from just 2,000 up to, so in a couple of years time, just at 20% a month, the account should be up to that, well above 100,000 odd. Okay, but that's only from 2. Okay, so let's just have a look. What I've done is I've downloaded the trading account from the 1st of, let's just change that. So go back to here, and this should show date order, oldest to new. So this is from the 1st of March, okay, all the way to downloaded straight out of IG. Okay, so this is right up to 30th of October yesterday. Okay, so all that data there has been downloaded into this Excel spreadsheet. Okay, so what we want to look at is the profit and loss part of this. Okay, so what I want to do is filter this out. Smallest, the losses first. Okay, so the most important part, the losses first. Okay, so since 1st of March to the 30th of October of this year, I have so far made losses of 1, 2, 3, 4, 5. So 5 losses above £100. So with trading, what you want is keep the losses small and the gains big. That's how the account builds up. Small losses, big gains, small losses, big gains. Sticking still to the 2% ratio. So not once have I actually had any trade closing more than the 2% risk of what the trading capital was at that time, as in this case, 1st of October. So the biggest loss so far on the 1st of October was 172, 6th of April 163, and another one in October 117. The reason for this is that as I'm trading with a bigger account, because of the way that the two's now built up, £2,000 built up, the trade sizes will start to increase. So even though you can see the sizes here like still in the twos, I'm adding to trades now. So when I'm in winning positions, I'm adding, so £2, sometimes might have £4 or £6 of trades open, okay, all within the risk parameters that I've stated. So you can see here, there's a 95 loss there, 95, 92. So these are all the losing trades over this particular time frame of 1st of March to the 30th of October. Okay, so I've sorted this spreadsheet out into the losses first. So what we're going to do is we're just going to note this down, 3, 4, 5. So 5, put 5 in here of losses. Over 100, 5 losses. Now what we're going to do is we're going to sort this out to the winners. Okay, so now we're going to go to the largest to smallest. Okay, so we had 5 losses over £100. Let's see how many wins we got over £100. Okay, in that period of time. So bear in mind, I keep saying this, it's all about running the winners, keep the losses small, get some bigger winners when the loss is small. So they're not spectacular, as in they're not thousands, but the trend is really strong, the momentum's strong, depending on the strategy we're using. But you can see there, we've got a 600 there, we've got 485, 471, 4. Have we ever had a loss in the 400s? No, but we've had gains in the 400s. We've had a 395 there, 279. So we've got, if we look down from here, so number 2, so if we go down to here, 20, so we've got 19 trades over £200. Okay, but let's see the total that we've got over £100. Okay, so from 2, we go all the way down here to here. Okay, so 100 there. So 73 trades. Okay, so we've got 73 wins over 100 versus 5 losses over 100. Okay, put a 1 in the chat box if you like that. Okay, if you think that's good. Statistics, 73 wins over 100 compared to 5 losses over 100. Yeah, I think it's pretty good too. It's that's what you should be doing. Okay, small losses, big wins. So small losses, okay, big wins. What we're after is these wins that we're getting here, I'm getting here, are small amounts. But look how much they snowball. They really build up. You know, 100, 200 here, 300 and something there, 400. You know, they're all adding up. Even the little ones down, a little further down. You know, 90s. Okay, look at the 90s there. We've got the ones in the 80s. They all add up. They all add up. These are all profit. These are all profit. All profit. Tiny little amounts lower down there in the earlier months. Okay, and sometimes where trades are just closed. You know, just quickly closed it because it's like just gone the wrong way. So lots of trades made there where I've just gone in, quickly closed them. Okay, all the way down there. Okay, so these are all the trades that are made. Okay, but what we're after here is those winners, when we're letting the winners run and run and run, and then we bank it at the most pivotal time, most advantageous time. Okay, so that's what the account really should look like. Okay, 73 wins versus 5 losses. This is what I wanted to just show in this webinar, and just give you that belief as well that, you know, if you are just starting out with a small account and you're still finding your way, I want to just show you how how this works, how this is just magic. This is, Albert Einstein's theory, the eighth wonder of the world, compound interest. That's why I have him a little bit further down on here. It's a great reminder. There he is, Albert Einstein. The eighth wonder is compound interest. Okay. And so what we're going to do is build this to a massive account. Okay. From this little acorn, that £2,000 back in 1st of March, this is going to build up into an oak tree. Okay, and we're going to see that over a period of time, because with this process, that's all that's required: time, a system that works, it's proven, and you just stick to the system. Don't go crazy. Just know, have faith and belief. This is financial alchemy. We're using leverage, obviously, to get the 20% returns, because it is we are spread betting. Okay? So to get the 20% returns, we have to be able to leverage the money, okay, which we're doing, but we're doing it in such a way that we are being responsible as traders and not trying to shoot for the stars. So I could turn around at the moment and put a great big trade on the premise that I think that the market is going to continue to keep falling, and I'll suddenly make 500 pips overnight, £10 a point, that's a quick 5,000. No, it's daft to do that. I don't need to do that, because I know all I require is time to really build this up. And then once this too gets to 50,000, I'm still only risking 2% of that amount. So maximum risk is now 1,000 compared to a tiny 40 quid here. You see the difference? It's outrageously different. Okay, but you've just got to have that belief. So if you're just starting with a small account, this is for you. You can see that I've done this just from the ground roots. Okay, let's have a look at this trade. Okay, so at the moment, see this trend line here, this support here. Okay, it's just stuck at the moment. Okay, it's not doing much. The market is just really slowed down. So you get that speed in the mornings, and then it slows down. It's 12 o'clock now, so it's really lazy now. It's which way is it going to go? But still sticking to this. Okay, so I've got my target here, and I'll bank some of the money. I'll still bank, even if it does start to pull back. I'll still bank 70 pips here, so that'll be another 140 to add to this win ratio, so it'll be another 74 on there. Or who knows? If it does hit the target, then it will be into the 400s and be added to this column again. So I'm not going to show you the return at the moment. I want to surprise you all for another day, but you can see from here it's going to be pretty sizable from 2000 if I've got wins at this level. Okay, some in Wall Street, of course. Primarily, it's a German 30. I've got to be careful on Wall Street because it can really move significantly in a day. Sometimes 500 pips to 1,000 pips in a day because of the bigger numbers. Okay, so that's how we swing big doors. That's how we swing big doors. These small amounts just accumulating, that snowball effect. Let's just stop the screen share now. We'll go back so you can see me. Where are we? Okay. Just trying to stop sharing. That's it. I never stop sharing. I like sharing. Right. See if you can see me. Okay. So I'm just going to share my webcam with you. Okay. So I hope you enjoyed that. I hope you found that helpful. It's so important just to, I suppose, keep doing these webinars for you so you can truly understand how trading is about having this right, the psychology, the importance of when you enter the trade, of going into it with a very still mind, detach yourself from money, treat it like it's a game, because it is a game. Don't make the money the important part of it. The money will just come. Okay, just don't go for those crazy, 100% returns overnight with a £2,000 account, because you're just going to lose money, and you're joining the other 80% of traders who lose, and it's because they've got this wrong. They need to really tap into the reasons why they are trading. What's the important reason that they're doing it? It's important not to have lots of distractions as well. I mean, I'm in the boardroom at the moment. I love it in here because it's so quiet, and I can just detach. And life's so busy, we can have so many thoughts coming into our head, and we just need to just quieten things down. I absolutely love trading because it's a test. It's a mental test as much as anything else. A mental test. It's a test of your discipline as a person, responsibility as well as a trader, not to be a gambler. Become a master one, and then you can try other things later. But there's enough money that you can make out of the DAX and Wall Street. You don't need to bother with Forex, pairs and gold, silver, or anything else. If you want to trade those, fine, but they're just distractions. They can complicate things too much, but just focusing on one. As I always say, it's the Bruce Lee approach, where he always feared the man who had practiced one kick 10,000 times than the man who had 10,000 kicks and only practiced them once. They're not going to be that good, are they? It's just going to be average. So become outstanding at one thing, and that's why I keep saying just trade the DAX. The DAX is a wonderful instrument to trade. I used to trade all sorts of markets years ago: Forex, gold, silver, DAX, Wall Street, FTSE 100, and so on. And it's too distracting. It's too distracting to just focus on one niche, on one particular market, and become a master at it. So if you found this webinar helpful, then please let me know. If you do want any help at all, then somewhere in this link you'll be able to set up a quick personal strategy session with me, and you can do that by just booking a time in my calendar, and that will usually that goes on for about 45 minutes, so allow some quiet time where I just chat on Skype and just find out what's going on with your trading. This is also a chat for people that have never traded before, and sometimes people that have never traded before do extremely well because they've not got into any bad habits. People that have traded for a little while and consistently losing money, it's because they're in bad habits, and you've got to break those habits quickly to go from the other side, from the 80% that are losing money to the 20% that are making money. And okay. So that's the end of this webinar, and I look forward to speaking to you all soon. All of you have a great day, make lots of money in the markets, and just take care of yourselves. Okay, and I will let you know the result of that open trade as well. It's I think it's useful just to see the result of it. You'll be able to see that if you go into a chart yourself anyway, whether it hits that 11,540 number, and if it does, then I'll have banked the money at that point. Okay, bye for now.
Hey, Adam Collingwood again here. Just to follow on from yesterday's webinar, I just wanted to show you the results as promised. So if you remember, we were looking for the DAX to hit a target of 12,539, and there were 3 points on the trend line. So if you join up the dots, you'll see that the third point I was looking at did get hit, but that didn't happen until today. So I left the trade to run overnight, and lo and behold, it hit my target, which you can see right here. Okay, so you can see the entry point there, the target, and also the amount banked, which was over 200 pips. As said yesterday, that's what I was going for, and so that's well over £400 there, which will be added to the trading account. You also see a nice Wall Street trade that I also picked up yesterday for a nice 170 pips. So this is another example of how small hinges swing big doors.